All right, it looks like we're live. Let me know if you can hear me and see me well. Nice to see all of you here. If you're watching this recorded, jump ahead about 13 minutes, as I always start a little earlier than scheduled, just to say hello to everyone. So we've got Indy from sunny Northwest Ohio, Silver Beast. Jonathan Wilson, Hio Silver, Matt Bittner, R. Elkes is here, Darren Smith, Dutch Libertarian, hi Dutch Libertarian, Martin Luke says, good evening, Mario from Blazing Smoke. You mean Basingstoke? Alex, hi Mario. In answer to the question addressed in the podcast, is 98 billion when last published, and I would bet that Fort Knox is empty of any gold also. Indy's here. Who else is here? Rodolfo Rodriguez. Jake's Custom Parts. Margaret Gambardella from Essex. The Rio Scott from Glasgow. Chris Snow says, hello, stackers. Voice is loud and clear, says Jaido the voice. Gene W, hello everyone. Darren Smith, Echo 005 from Grimsby. Spock 2024 says Salve Tutti. Andrew Brown says good evening, Mario, from the Scottish borders. Fox Moongaze is here too. Anish Nambiar from Buckinghamshire. I've got my new I Love CO2 hoodie from the Wide Awake Clothing. If you're interested in Wide Awake Clothing, there's a link in my in the description of my video where you can get this. Also, the World Enslavement Forum. There's loads of stuff. I think it's a good way of bringing up some interesting topics of conversation with people who are not aware of what's going on. Windward Skies says, hi, Mario. Morris Udall, good evening, Mario says. Hi, Morris. Evola Sunglasses from Essex. Yeah, it's actually not Rudy's birthday. It's the first year that he's been with us. He was born a couple of months before February 4th on December 12th. But yeah, it's a year since he's come home to live with us. Yeah, and he's grown quite a bit, of course. Big AG says, good evening from Missouri. Hi, Big AG. So yeah, the topic of the well, one of the topics, but what I chose to speak about today is the fact that the Fed has stopped publishing vault data. What's vault data? Well, that's the real cash, coins and cash that banks hold in their vault. And they did that over 4 years ago. Well, about 4 years ago. I've spoken about this before, but I thought it would be interesting in touching upon this again, especially with Clive on. Yes, I think bank depositors are being kept in the dark by the fact that they're not publishing those data. Jane DR says, good evening, Mario and Rudy. Alex, Mario, are you suggesting that Rudy has been digging up your garden in the last video? Yeah, I mean, a few days ago, he dug and I filled it up. It was the bed. And then I saw he's done it again. So I just left it because he can't dig any further. So yeah, he can look like a saint, but he can be a rascal too. Pope Pot's net zero. Yeah, you need to get one of these, Pope Pot. I love CO2. check the description of this video. It's right on top. A link where you can get this. I love CO2. He says, I have a feeling they're going to have a lot of gold. Um, who's that? Pope Potts Net Zero. I'm not sure. I was following you earlier. Scott 49 140. I know it's old, but why did Janet Yellen say a few years ago the Treasury was not going to extend the maturity of long-term bonds? Well, what do you mean extending the maturity? Um, I think the longest maturity they issue is 30-year bonds. Um, was there talk maybe that they might issue a 50-year bond? I don't know. Or is it about the amount of long-term paper that they get going to issue? But yeah. Indy, yeah, he's a digger, Rudy. Level 1 from the Bahamas says good evening. Planet Blake says hi. It's nice to see a lot of you also just communicating with each other. Just goes to show that is a bit of a community. Manic Miner, good evening, Mario, Rudy, and Clive. Hope you're all keeping well. Yeah, Clive should be coming on soon. Quadman 72, Rudy is feeling what's coming and is preparing holes for the dirty men's safe. You just misunderstood him, yeah. Andrew Rama, Rudy is hiding his stack. Sometimes you give him like a treat, and he'll take it outside and leave it there. He hides it in the bush. Dutch Libertarian, yeah, we're a big team, not a small community, big team. Yeah, the groomer, Belly Dance Arabia, whenever she comes once every 2 months, she gives Billy a new bow tie. It's a red one with white stars, the one he's got now. James Rio, Mario, hello from beautiful 46-degree day in Wisconsin, USA. Yeah, Rudy does chase the wildlife. He tries to chase the birds and everything and the foxes and everything else. Martin Clark says Rudy's a stacker. Matt Bittner is there. I love Cole shirt. I don't know. You should look. Let me get the link for it, and I'll put it in the chat here. Uh, there's quite a lot of stuff there about World Economic Forum, everything. Let's see. Getting the link. You go. Let me. Yeah, Europe is on. The farmers are protesting, aren't they? Quite a bit, and it's spreading. It seems. Clive just came on. Hi, Clive.
Hello, good evening, Mario. How are you?
I'm all right. I was showing the viewers I'm wearing my I love CO2 hoodie.
Okay.
Uh, yeah. So yeah, Clive, I've been saying hello to everyone. Uh, they they've been asking where you were. I said, well, you should
Yeah,
be
you
on any
got
minute.
400 people watching. That's amazing.
Yeah, I mean, we usually get about 1,000, sometimes more. So maybe
Hmm.
I was telling people that because in the beginning I just say hello to everyone, but the title of the live stream, and it doesn't mean that we have to focus on that the whole time, but it's I have to pick one. Why has the Fed stopped publishing vault data? And my question as well is our bank depositors are they're being kept in the dark, and I think I sent you some information on that, and maybe we'll just wait a couple of minutes until it's the 9 o'clock starting time. Maybe we can look at that first, and then we can look at a few things as well that you might think is important, and answer questions. Um, oh yeah, is there a lot of coverage, Clive, about the farmers' protests in Switzerland?
I get the impression. Well, I don't watch mainstream television, so it's
Yeah.
hard to say. But and I get the impression it is a little bit suppressed. But you can find it on YouTube with no problem.
Yeah, one thing that there's a lot, it's not just about the climate change rules they're trying to implement, the net zero on agriculture. I saw a channel where they're showing a live picture of Brussels, and there's a big sign that they want the EU Mercosur, which is it's like the European Union of South America. They want, because there's a deal now that the EU, the Mercosur countries like Argentina, Brazil, will be able to export food stuff to Europe with no tariffs, or like a free trade agreement. And European farmers don't seem to like that because their prices are a lot lower. So there's a lot going on there that they're not happy with. But I think generally it's the cost of the costs and the regulations trying to maintain this net zero agenda. But here in the UK as well, like you said, I don't really watch mainstream media, but I see people on X and on YouTube talking about it. So yeah, Clive, let's talk about the vault number at the Fed. I know it sounds boring, going from the farmers' revolt or
Hmm.
protest to that, but I think it's important.
So yeah, it's interesting they've decided to stop that publishing that particular piece of data a few years ago. Um, at the time they stopped publishing it, the amount of cash they had in the bank was quite low relative to all the reserves of the bank. Because I don't know if there's any particular reason why they stopped publishing it. Is it that they don't want us to know, or is it people didn't value it? I don't know. But I think the real point here is you don't really know for sure to what extent your bank can pay out to you if you walk along to the bank and want your money. It's always good as long as everybody doesn't turn up on the same day. But we've seen that a few times in history where a lot of people have turned up at the same moment of wanting their money, and they've had to shut the bank. And as we saw with Silicon Valley Bank recently, and we've seen countless times over the decades.
Yeah, so this is the chart of vault cash. So that's cash that the banks hold. So that's Federal Reserve notes and coins that they hold in the vaults. And as you can see here, the last time they published it was for August 2020, and it was at 95 billion 327 million. And I think I read, I think if you scroll down here, there's because I've done a video about this before, but at the time it was on average $230 per depositor in the US. So that meant if you went to your bank and tried to take $300, they wouldn't have it. But That's an average, and people don't go to take money, cash out of the bank uh, every day or all the time. But one thing that I thought is interesting is to look at demand deposits. Um, and demand deposits, Clive, do you want to explain to the viewers what it is?
Well, it
Um,
looks like there's about 5 trillion of demand deposits, and that's the those are the deposits you get out of the bank simply by turning up or using your debit card. They're not time deposits or money market funds where there's a little bit of a delay when you get your money out. So yeah, in theory, people could get $5 trillion out in one go. We are talking trillions, or we're talking billions
yeah,
here. Yeah,
trillion, yeah,
5,000, yeah, 5,000 billion, and they seem to only have about 90 billion, 95 billion in
90.
cash to deliver that. So for sure, there's not a lot of cash in the bank compared with what you could withdraw, and that's what we call fractional reserve banking. Because what they do, they take. We have to understand that when you put $100 in the bank, they don't pop it into their vaults and wait for you to come and ask for it back. They'll lend 90 or $95 of that to somebody else who will then take that money to his bank and deposit it in his bank. And then his bank will then lend out 90 of that 95. And then the next bank, when it gets deposited, the 90 gets deposited, will lend out 85. And that's fractional reserve banking, which means that every dollar you've deposited in the bank multiplies the money supply by perhaps 10 times. Of course, it's credit money supply, but effectively the money goes round in circles many, many times, and you can't all have it back at the same time.
That's right. And it's interesting that the demand deposits, they started going through the roof here after uh, March 2020. We all know what happened there. The Fed just didn't just print trillions to give to the financial system, but it went direct as well. As many people have spoken about it, it went directly to non financial institutions, to the consumer. And it's interesting that they stopped uh, publishing this vault number right around this time that it took off. And I think it's worrying because is it any wonder, Clive, that they're thinking about having a Fed coin or a digital dollar because they want to try to keep people from demanding cash as much as possible. And this is not talking about all the cash that is held, let's say, outside the United States, let's say in Russia and other countries, emerging market countries where they take real cash. What if they were to go to banks over in those countries and deposit that cash to exchange for the local currency or to buy gold? That could increase it as well. So there's that as well. So I just wanted to jump over here, Clive, to this. And this is an announcement from from the Federal Reserve, and it was always thought that the reserve requirement would be about 10%. But as you can see here, Fed announced March 15th, 2020, the board reduced reserve requirement ratio to 0%. So it's a crazy system. And
Yep.
I don't think it's just the fact that bond prices went down and it's hurting banks' balance sheets, and also commercial real estate is souring. I think it's the fact that the system is so leveraged. What do you say about that, Clive?
The system certainly is leveraged. And I think the real problem you've got is nobody really knows to what extent things could go wrong if everybody decides they want the money back at the same time, because that money which you put into the bank has been lent to somebody else, most likely on a 30-year mortgage or perhaps on somebody's credit card bill, which they won't be able to repay at short notice. It might have been lent to a big corporation who needs it for some major project, but like building a factory. It might have been lent on a commercial real estate loan, where we know that much of that is now underwater in terms of valuation. So when people all go to the bank at the same time and ask for their money back, not everybody's going to get it. What they're banking on is that won't happen. And it doesn't happen in normal times, because in normal times, you don't need more than a certain amount of money in your bank and in your pocket. So things carry on and people pop into the bank, get some money for their shopping, and someone else puts it back in the bank. So it goes round in a big circle. But it's a question of confidence. So if there's an incident which causes the confidence to erode, either generally regarding banks or with regard to a particular bank, people are going to say, I'll take my money out in a hurry just to be sure. And I've been reading about the what happened in the 1930s, and we were in the middle of the Great Depression in the 1930s, the early 30s, and people were starting to take money out of the bank. And the faster they took it out of the bank, the more the bank squealed, and the more they squealed, the more people became worried that they might be the last one in the queue. And it got so bad that Franklin D. Roosevelt finally had to shut the banks in February 1933 so people couldn't take the money out anymore. And he did reassure everybody that the banks would be opening soon and you'd be able to get your money out from those banks which reopened. So what actually happened back then? Not all the banks reopened. Some of the banks opened and you could get your money out. The sound banks reopened, but the unsound banks didn't reopen. And the problem for many people was that even if they owed money to one of the banks which never reopened, they still had to repay that loan because that loan was effectively taken over by another bank or it was transferred to administrator of bankruptcy. So whilst people lost their deposits in the banks which closed, if they owed money to those banks, they still had to repay their debts.
Yeah, and that's why, as I always say, yes, you need some deposits in the bank, demand deposits, or if you want to call it money, to pay your bills and transact and everything. But keeping too much fiat currency in the bank is a really bad idea, especially in this day and age. And Clive, it makes me think the fact that they seem to be hiding this number, the vault number, and they seem to really not care about it. It points to me that they'll do whatever it takes just to keep it going, the system. And that means, they'll bring up a BTFP, they'll do not QE. So it shows to me that, yeah, they don't give a damn anymore about the banks because they know the Fed and the Treasury will come and salvage everything. I've got a
It,
super.
it, it, it
Yeah.
kind of reminds me of, oh, sorry, Mary, you're going to do a super chat.
Yeah,
Off you
yeah,
go.
there's a super chat. I just want to acknowledge. Thank you, Indy. And Indy says, free Assange and all innocent people. Thanks, Mario and Clive. Thumbs up, friends. I concur with that sentiment about Assange. So, Clive,
Yeah, so the fact that they stopped publishing the data kind of reminds me of what happened many decades ago when they decided to stop publishing the M3 numbers. I remember when I was a young man and working back in the 1970s, we all used to gather around the TV as the Federal Reserve. I think it might have been every Thursday, or maybe it was every Thursday once a month, or the first or Thursday every month. The Federal Reserve would announce the M3 number. And it was a very, very important number. It was Paul Volcker was in charge at the time. And it was so important that it told you what was going to happen to the stock markets the next week. Because if the number went up, if the money supply went up, M3 went up, that was good for the stock market. If it went down, they were tightening and that was bad. And suddenly one day, out of the blue, they decided to stop publishing the number. And nobody knows anymore what that M3 number is. And it would be a very important number to know.
yeah, I think it was, wasn't it in the just after the dot-com bubble, like in the early 2000s?
It might have been. I don't remember when it was a long time ago, Mario. So
Yeah.
the dot-com bubble was what 23 years ago anyway.
Yeah,
So
yeah. I just wanted to give the viewers some idea of that vault cash and also demand deposits. I went back to like 1980 and calculated. So there's $4.23 for every $100 that people had on deposit. So there's $4.23 in cash at the banks for every $100. But now with this, I took the last number, 93.5 billion in vault cash. We don't really know. We're in the dark about it, but I took the last one from it was in 2020, August. And now with 5 trillion plus in demand deposits, there's only $1.89 for every $100 on deposit. And I think that is worrying. If I had over 250,000 in the bank, I'd be concerned about that. What do you say, Clive?
It doesn't make sense to leave too much money in any bank, and certainly if you've got more than the guaranteed amount, you're being a bit of a fool. You should really split it up, and realistically speaking, you shouldn't really have it in cash unless you need it to buy a house or something, some large transaction. I mean, who needs $250,000 in cash unless you're the sort of person who sees that as a safe bet? But frankly, I don't see it as a safe bet. I see it as a fool's bet because every day which goes by, they're inflating the money supply effectively through the. If you think about the money supply, it's the combination. For me, it's the combination of the treasury market and the amount of money in circulation. Because the treasury market, if you've got a treasury bond or treasury bill, you can sell it instantly and turn it into cash. So those who've got treasuries, those who've got treasury bills, treasury bonds, treasury notes, as far as they're concerned, is as good as cash. And the volume and the quantity of those bonds, the amount of that debt in existence is going up every single day, and it's going up by a lot. So if you happen to have cash on deposit, you're basically going backwards compared with everybody else.
I saw this someone on LinkedIn that I know is actually from Thorsten Pollite. He published this. He went in the Fred website, and anyone can do this, but he noticed that M2 seems to be bottoming and picking up a little bit. And it's interesting that ever since M2 started going down back in late 22, early 2023, the stock market had been under pressure. But now, since they started pumping it up again here, and here, it seems to be going back up. So what you said there about increasing the money supply, it does help the stock market because it creates liquidity.
And increasing the government debt, which is what's really that's the bigger move going on. That also is pretty good for asset prices because as the amount of government debt goes up in a day every day, what it basically means is that government is borrowing money from you or I. It then spends that money, and the net result is there's more wealth on the planet. There's obviously the government at the end of the day has got more debt, but there's more wealth for everybody else. So that as the amount of treasury bonds and bills goes up, people are reallocating their asset allocation. And if they wanted to have 60% in bonds and 40% in equities or vice versa, well, after the government's issued a few bonds, now they've got 61% in bonds. They have to sell a little bit of bonds to buy equities, and that pushes up the equity price. It pushes up the gold price. It pushes up the price of houses. So to the extent that the government is running deficit financing, as has been the case for a number of years, and according to their budget will continue out as far out as the eye can see, it's going to be good for tangible asset prices like those sort of things.
Yeah, and just noticed here that the national debt is going up to above 34 trillion 200, and I was looking since the beginning of October, which is roughly around the where the fiscal year starts. It's gone up by the total debt has gone up by 724.5 billion. So that's in 4 months. So that's a rate of 2.175 trillion for the year. So that would be new, the deficit or new debt. But if you also look, Clive, to the debt held by the public since October, so here it is, 26 October 4th I took because today is February 4th. So it's 26.366 trillion. And if you go to it today, it's or second 1st of February, it's 27 trillion and 96 billion. And that's actually more than the increase in the debt, the total debt. So the debt held by the public has gone up by 730 billion. So that shows us that QT the Fed's doing, and maybe some other government agencies aren't buying as much bonds. But it's even worse, this 730 billion, because it's on a lot less debt, and it's increased more than the debt has increased in terms of the total debt held by the public.
The other important thing is the interest that the government is paying on that debt is rising rapidly. I've got a chart on my screen from the Fred, which is the
Yeah, you can
Federal
share it if
Reserve
you'd like
of.
to.
Yes, let me do that for you. Da, 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 um, share screen. There we are. Just to give you a second. There we are. Share. Perhaps you can see it now, Mario.
Yeah,
So, as you can see, the amount of interest on the national debt is now, for the first time ever, over 1 trillion. You go back just a couple of years ago, it was half a trillion. Uh, but why is that important? Well, that's roughly 20% now of the government's tax take. So, as a percentage of the amount of taxes that they collect, the interest on the national debt is rising. And I did a little calculation, and the amount of interest they're going to have to pay on the national debt, if it continues to accelerate at this sort of pace, it could be as early as 2026, 2027, but certainly by 2030, we'll be paying 100% of the tax take in interest on the national debt, which will leave nothing for anything else. I mean, who's going to collect your rubbish if they haven't got any money left? Well, of course, they'll carry on borrowing and doing deficit spending. But you do realize, I mean, I think everybody here realizes you can't have a debt which is getting larger and larger, where the interest expense is spiraling out of control. So something has to be done about it. But right now, there doesn't seem to be a lot of will to either reduce expenditure, because that would involve cutting into the mandatory spending, social security and unemployment, and Medicare, which I think there's no political will for that, and it would be illegal anyway. They can't really. They don't want to cut back on the discretionary spending, which is about 1/6 of the budget. That's excluding the military, which is another 1/6 of the budget. So the military, they're not going to cut back on. The remaining 1/6, even if they were to cut back to zero, which is not possible, it wouldn't really make a dent in their budget, which is to continue to increase the debt ad infinitum. It might just slow things down a bit. So really, the other side of the coin would be, can they raise taxes? Well, that would involve the turkeys voting for Christmas, and there doesn't seem to be any will to do that at the moment. In fact, I saw something just today which kind of implied they were cutting taxes in one area, although I didn't really read the article. But what is happening is the tax take has been coming in at less than they budgeted, and the expenditure has been going out of the door at more than they budgeted. And there's a nice little confession from the Congressional Budget Office on their website, in which they say that for 2023, that's the year I think ended in September, if I'm not wrong, September 2023, they said they basically got it terribly, terribly wrong, and it was their budget was the projection they made was more wrong than any projection they've ever made before.
yeah, that's not surprising. And can you imagine that interest payment on the debt? Uh, you said it's at 20% now of all tax receipts. But what if there's a really sharp recession and income tax receipts go down, and they're going down right now, income tax receipts. If you go back on the US debt clock page, you can see tax receipts. They're not going up like the national debt, they're going down. That would be another cocktail for disaster. And the other thing is we see in the news all the mayhem going on in the Middle East, the fact that the US and the UK, they're not trying to make peace. If anything, they're trying to make things more and more unstable. It
So
doesn't
yeah, so
pose.
military expenditure will rise.
Yeah, and I heard someone say that the missiles they're firing in Syria and Iraq, sorry, uh, they're, let's say, what, $1 million, and the drones they're trying to shoot down as well. They're a million. No, it's $1,000. So we're wasting money while the enemy is actually fighting on a shoestring.
So they're using million dollar missiles to shoot down $1,000 drones that the Houthis or it is bought on
Yeah.
AliExpress.
Yeah, someone I forgot here. Someone noted here one of the comments that the 34 trillion will never be able to be paid back. I'm gonna just say something about that, and then Clive could add something afterwards. Well, yeah, you're right. The 34 trillion will never be paid back because if you pay it back, you destroy the currency. There will be no currency or money, so to speak, in the system, and you have a Great Depression. But that's the problem with the fiat currency system, where there's no commodity or gold backing or silver backing to the currency. It can go get out of control. The last president to pay off the national debt was Andrew Jackson in 1835. And not surprisingly, I think the next year, 1836, he didn't renew the charter for the Second Bank of the United States, which was the central bank at the time. So, and that's not coincidental because without a central bank creating currency or reserves out of thin air, the government would never be able to borrow as much. So you're right about that. The 34 trillion will never be paid back, but it's gonna make sure that the currency collapses because it has to keep increasing. And I think now, as we saw with the interest on the debt, it's going exponential. So, Clive, I'll let you.
Well, I guess the default is not going to happen, but I think there's a number of scenarios that will happen because, as has been pointed out, they can't pay it back. So the one way they've always dealt with this in the past is inflation, and basically you print more money than the increase in the debt, and therefore the debt as a percentage of the gross domestic product starts to shrink. That, of course, is very inflationary. Um and the trouble is, if they do it this time, the size of the debt has become so large that it will be very inflationary if they decide to monetize it by printing away. But I think they're going to have no choice on that. But there are some other possibilities. One of the possibilities is some kind of restriction on what you can do with your debt, with the American dollars, or maybe some sort of bail-in where uh, people are forced to buy into the American government debt, and I would be talking about pension funds here and banks and so forth. That's a possibility. Another possibility is some kind of conversion of the currency where we start to see a new type of currency operating side by side with the dollar. That would be perhaps something similar to what we saw in the United Kingdom in the 1960s, where you have ration coupons and you can't spend your money unless
Mm,
you have a ration coupon. So you might be a millionaire, but if you want a pound of butter, it doesn't matter how much money you're going to pay, you still got to have the ration coupon, or you can't get your pound of butter. And of course, we have talked about the possibility that after CBDCs come into existence, which will be programmable, they'll be able to control a lot of things, including how much you spend of your CBDC, where you spend it. I don't know if the CBDC will come into the United States because I think Mr. Trump has said if he becomes president, he will not allow it to happen.
yeah.
But if it does happen, one of the ways would be to basically bottleneck how much money you could put in the CBDC. So you basically pass, or after it's been adopted, you pass a law to say all transactions, whether you're buying a house or investing in the stock market or just buying your groceries, have to be via a CBDC wallet because we need to make sure you're paying your taxes. We need to monitor you for money laundering and for corruption rules and all kinds of things like that. So everything's got to pass by your CBDC wallet. But you can still, up until a point, put your old money into your CBDC wallet, but then, well, there's some restrictions. Now, if you want to put in more than so much, you need permission, or you're restricted to 20,000 or 200,000 or some figure. And suddenly, the money that you had in the old system, the old dollars, effectively becomes undeployable because you can only spend what's in your CBDC wallet, and possibly you're not allowed to convert anything into your CBDC wallet. That's another way out. But realistically speaking, if you own a lot of government debt, and I think the same applies to cash and money market funds and so forth, there is a real risk that you're going to be paid at some future date nothing at all. In other words, it's going to be pretty worthless. Now, I don't think that applies to the man in the street who's got $5,000 if he's lucky in the bank account. They'll be looked after just fine. But if you happen to be a foreign government or a foreigner in some foreign country with a lot of money, a lot of dollars stashed away, why should they pay you? They probably just say, well, we don't have to because we've got a new currency and you can't change your old currency into CBDCs, is the new currency to be spent. But I do think you're carrying a big risk if you've got cash in the bank, if you have government bonds, and particularly government bonds. So it's not something that I would have too much of.
Yeah, we've got a question from Hannah, question from Mario and Clive. Even with inflation, they still can never pay it back, correct? I'll answer that and I'll let you answer, Clive. I think, yeah, they can always keep printing, and they can't pay it back. But at one point, someone asked as well, and I'll answer that question as well at the same time. Can the debt get to 100 trillion? Yeah, it can get to 100 trillion, liquid drilling. And the thing is, it will be virtually worthless when it gets to that level. So yeah, that's a way of paying back, just destroying it through inflation or hyperinflation.
Maybe, Mario, we should just talk about what happened at the Federal Reserve last week and the gold price. Now, I'm sure a lot of your readers follow the gold price, and they will have seen on Friday afternoon, suddenly the gold price in a few seconds plunged by about $25. And that was because the interest rate on the Treasury 10-year bond jumped by, it wasn't a lot, but by normal movement standards, it was a lot. I can't remember what it jumped. Let's say it jumped from
20,
408 to 420. It was about 20 bips.
20 basis points, yeah, jump because of the very strong job numbers that we
Yeah.
want to touch upon as well.
So that's what I was going to talk about, the jobs numbers. So the job numbers came in, and if you look at the headline number, it was a tremendous number on the back of a very good number for the previous month, which was revised upwards. But when I burrowed into it, as I usually do, I always look at the household report, which is a different set of job numbers produced by the same agency, by the Bureau of Labor Statistics, and they published that on the same day. Now, the BLS report shows that they lost 31,000 jobs in the month of January instead of the 300 and something thousand they say they gained. And in the previous month, they lost, I forget the figure now, but it's something like 800,000 jobs over 2 months that have been lost, according to the Bureau of Labor Statistics, compared with something like 600 or 700,000, which has been gained, according to the non-farms payroll report. So we've got quite contradictory stories coming out of the same government bureau, which means that if people are relying on that jobs report to say the economy is very, very robust, I think there might be a reversion downwards, as often does happen in the coming months. And the other thing I think we can say about jobs is you've probably been seeing there's been a huge amount of redundancies in the last few months announced from technology companies. And those numbers won't yet be showing up in the official unemployment numbers or the job, because people will have been given 3 months notice or 6 months notice, or sometimes a bit less depending on the job you're in. So they will still be being shown as employed, but there are people who will be coming off the payroll over the coming month or two. So I don't think the jobs are going to stay that well. So that brings us on to the question of what's going to happen to the Fed funds rate, and when is the Fed going to start pivoting and reducing interest rates? Um, Now, there was a very interesting and subtle change in the wording of Jerome Powell in his last speech on the 30th of January compared with the one which he gave about a month and a half earlier. Um, his words, I quote his words here. He said, "The committee does not expect it to be appropriate to reduce the target range until it has gained greater confidence that the inflation is moving sustainably towards, I repeat that word, towards 2%. Now, that's a subtle change of wording, because in all the previous communications, they had the number of 2% as an absolute target, and they weren't going to reduce interest rates before that. And there is another interesting comment here. Um, in December, 13th of December, they said, while we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways. We are prepared to tighten further if appropriate. That's December. They were prepared to tighten further if appropriate. Now they say, we believe that our policy rate is likely at its peak for this tightening cycle,
Mm.
and we are
Yeah,
prepared to maintain the current rate as long as necessary, or something like that.
yeah.
So the
The
wording implies we're going to go down soon.
Yeah, they have dozens of economists looking at the wording. And the other thing as well, you said moving towards 2%. It doesn't mean to say that it has to be at 2%, right? That's why I just got the chart here of from Kitco. This is when the number came out, 8:30 a.m. New York time or Eastern time. And uh, the algos, trading algos, they bid up yields or they sold treasuries and they smacked the gold price. But I would say, Clive, in the past, when we've had numbers like this, really strong numbers, gold would have dropped a lot more. I think this is quite positive, the fact that it didn't go below 2000 after such a strong number. So the number was 353,000. It was expected around 150. It's a huge, huge miss on the upside. I think the fact that we even rebounded at the end of the day and finish around 2040 is quite positive. I could be wrong. What's your feeling, Clive?
Well, of course, in the short term, on a day-by-day basis, gold is sensitive to interest rates. But in the longer run, the interest rate doesn't really matter for the gold price. It's going to go up anyway. What really counts is the real interest rate. That is the interest rate you can earn minus the real rate of inflation. So I'm not necessarily talking about the official rate of inflation, which we all know is not really the true rate of inflation. But whether you take that or the real rate of inflation, gold price, because of the supply of money, because the supply of government debt is rising, and because the risks of holding government debt is rising, the gold price is going to go up in the long run anyway. And it doesn't really matter what happens to interest rates. So people are focused here. We're focusing on the very short-term interest rate, and that does move the gold price around. But we've already had the 24 hours now of that slight peak in interest rates hitting the gold price, and you see it. So it started to recover fairly quickly. So I think reality is starting to set in, and people are realizing that actually it doesn't really matter what the government says about the state of the economy or what they're going to do to interest rates. What matters is the huge quantity of money which is being printed and has to be printed to fund the national debt. And at the end of the day, that does mean sooner or later the Fed is going to pivot. Sooner or later, the Fed is going to be forced into the market, whether it's told to or it just does it out of national duty, to start buying the longer dated treasury bonds that the government wants to issue because nobody else will want to buy them. And that will be creating a lot of money into the system. It'd be very inflationary. And of course, that will be extremely good for all asset prices, gold included. And I think gold will be, when this does happen, I think gold will be the one which leads the charge forward.
Yeah, and it's weird because we're talking about cutting rates here and everything, but the Nasdaq and the S&P and the Dow, they're all like at all-time highs. It just seems funny. I mean, that implies, in my view, that we could see some kind of not huge crash in the stock market, but a big correction. Because why would the Fed start cutting rates if the stock market is so strong? I've never
Well,
seen them cut
you know,
rates.
the headline number is heavily driven by what's called the Magnificent Seven, the likes of Meta, for example, which went up $20 on Friday. A huge, it was 20% on Friday. It was a huge leap, and I think Amazon went up about 8% on Friday. Or it might have been Thursday or Tuesday, but they came up with the results and amazingly good results. Now, what caused these good results? Well, they'd fired tens of thousands of people. So by firing all these people who are now in 3 months going to go onto the unemployment list, they've managed to increase their profits. And as they increase their profits, the market perhaps wasn't expecting such a big increase. It drives the share price higher. Yes, and we can have a crash at any time. I'm not forecasting, and I don't forecast crashes, but I can tell you that every day that I've been investing money in the last 50 years, a crash has always been around the corner, but very few of them have happened. But at some point, there will be one. There always is, and there'll be lots of people standing up saying, "I forecasted or I predicted it," and good luck to them. But markets go up and they go down, and you can have extremely long periods when they're rising and extremely long periods when they're falling, and they can completely defy reason. So I don't spend a lot of time trying to speculate that the next move is an up move or a down move. I think everybody should have some exposure to the stock market, but I wouldn't personally be invested in the Magnificent Seven at this time because they do seem rather expensive to me in terms of price earnings ratio.
You probably heard of Jeremy Grantham. I think he's originally from England, but he's US based. He's usually quite bearish. And he said a day ago, stay away from US stocks, expect AI bubble to burst. And I think he mentioned that it feels like 1999, in the dot-com bubble. I've heard other people talk about that. And what happened in 1999, early 2000? Well, gold bottomed at $250. So that's another reason I think why it seems quite interesting where we are in gold and the stock market. But Clive, I also wanted to bring this up, and this is changing the subject a little bit. Uh, why is the U.S. suddenly bombing Iraq? They're saying that they're bombing it because Iran is involved in Iraq and they're not happy with Iran. But if you look at the story here from oilprice.com, it says Iraq wants to ditch the US dollar in oil trade. And the other one that's even more worrying, I think, for the Americans from oilprice.com is China paused to take further control of Iraq's key southern oil assets. I mean, this can't help. I know you don't look too much at geopolitics, but I think this is a big reason why I think, we need to look at the debt and the deficit because the Americans are not going to let this happen. And I think they could take the whole of the Middle East in a big war to wreck the Middle East because they don't want to give control of Iraq to China.
I think America and the US dollar has seen its peak for the it's an empire which has come and now it's going to decline. It won't be very fast. It'll be a gradual decline, but and what you're showing on the screen here is another sign of the way things are going. We're seeing all these countries in the BRICS nations now talking about trading oil between themselves or other commodities between themselves in their local currencies. There's no real talk of a BRICS currency yet, but they are talking about swapping their local commodities for the other country's local currency. And that's a move away from the dollar. It's a move away from the SWIFT system, which does mean that the dominance of the American dollar is starting to wane. And I think that's just another side of the, of the times and the fact that America has, to some extent, lost its power. But it will get, one of the things which tends to happen when this happens is they try and divert attention by getting involved in wars here and there. And I hope it won't, but it does seem that these are early signs if they're getting involved in Middle East again.
Yeah. Okay, Clive, maybe we could switch to questions from the viewers. There's a question here from Denny Younghead. He's just come on. He says, good evening, Maneko. How's the stacking going? Well, I just bought last week I received one kilo bar of silver, a metal ore. I bought a little bar of gold a few weeks ago. I'm always trying to, if I have extra fiat, to get a little bit of gold and silver. What about you, Clive?
Well, I was lucky enough to buy one of these, a double eagle here. I think they call this a Saint Gaudens double eagle, if I'm not mistaken. It's in absolutely immaculate condition, untouched. I had to pay about $200 over the gold price for it because of the condition. I think the dates is 1933. Um, the,
1930.
the the dealer said it was quite rare.
No, yeah, you can't be a 33. You'd be like yeah, you'd be partying all night long.
It may be my eyes. Yeah, maybe it's not the. Oh yeah, 1908.
1908, yeah. Uh do I buy gold backs? No, I've heard of the gold backs. They look like the plastic banknotes, but they've got gold in them. I've never bought one of those. They're interesting. Have you heard of them?
Who issues those? That I've never heard of those.
It's someone in the States, private company, Goldbacks. Yeah, I've heard, I've known of them for many years, but to be honest, I prefer the coins, and I also prefer, silver. I think if we go back to metallic money system again, there will definitely be not just gold coins, but silver coins because you can't just uh, have a currency based on gold alone because you wouldn't have all the change. So, and I made a video about this earlier today about how you could use gold and silver, and I looked at the British system before 1914, and I can actually show what I talked about here. I'll just share it with you guys. I don't know if you saw the video, Clive, but here it is. So this is how it used to be. So a sovereign was a pound. So a crown was 60 pence. So four of these were, legally the same as one of these. So it was really easy to get change for things. You could maybe buy a loaf of bread for 6 pence. If you paid with a shilling, they give you 6 pence or three or two threepennies change. Or, if you this is interesting, the florin 24p, 10 of those is going to be a pound because a pound was 240p. So 10 of those would be the same as one of these. Some people think it's confusing, the English system, but I think if when you look at it, it makes a lot of sense. What do you think, Clive?
I have all of those pieces in not the same dates as you, Mario, but I certainly when I get the opportunity, I'll buy myself a bag of the old English coinage or a bag of the old Swiss silver coinage. And I think everybody should think about having some of this at their home because you never know when you're going to need it. And if you've got it in the country of where from the silver coins from the country where you live, they'll be easily recognized by the population if you suddenly have to start spending something other than the cash. And why would that be the case? Well, maybe there's a crisis in the world, they close the banks, or maybe nobody trusts the cash anymore. But they will trust the silver, they will trust the gold. And people will learn very, very quickly how to recognize a gold coin or a silver coin from their own country in a crisis, and they'll be more than willing to take it for your loaf of bread or whatever else you want to buy. I think the other thing to say about those coins that you're showing on the screen, Mario, for example, let's take the threepenny bit, which is about now in new money, it's it's a bit less than a penny halfpenny. I haven't got the figure exactly, something like that. Well, you could buy a lot with a threepenny bit back in the 1940s and 1950s. And I recollect that a bar of, I remember this because my grandfather, when I was about 6 years old, I think, or maybe 5 years old, my grandfather put in front of me a bar of chocolate and a £1 coin, sorry, not a £1 coin, a £1 note, and asked me which one I'd take. And being about 5 or 6 years old, I took the bar of chocolate, which was a sixpenny bar of chocolate, sixpence. So I could have, instead of if I'd taken the pound note, I could have bought 20 bars of chocolate. Now, I think you'll be struggling to buy one bar of chocolate with a pound these days, which just shows how much the money has been devalued since I was a child in the 1960s.
Yeah, Josh Reporter, I guess you're probably in the States, is asking are those conversions still accurate today? Not really, because they decimalized the currency in 1971. So now a pound is 100 pence, and those coins don't circulate anymore. They're all from pre 1919. Yeah, pre 1920. In 1920, they took half the silver off these here. And then by 1947, they took all the silver out, but they used the same coins until 1971, but they were just copper nickel. And by 1971, of course, there was no gold circulating anymore. So that's the system. This is pre-World War One, I would say. We've got a super chat here from Chris Conman. Thank you, Chris. I work for a private Fortune 500 company that I own stock in that is not freely traded on the open market. Should I worry about the great taking by being a shareholder in them? Thanks. So, do you own like those so you can't trade it because it's locked in because of some kind of I would say option scheme. Is
Yeah,
that
it'll be restricted stock.
yeah, restricted stock? What do you think? Will the great I think the great taking would take anything that's uh related to securities, even if you can't trade it.
It sounds like he's in the USA, and the great taking in its illustrations about how uh, you can lose the assets which you think are held in safe custody for you was based around some US examples, although he did say this extends to all the other countries. I'm not absolutely sure that is the case, but it is a risk because people did lose their assets in the United States when Lehman Brothers went bust, even though those assets weren't part of Lehman Brothers' balance sheet. In other words, they thought that Lehman were holding assets for them in custody, but Lehman had then pledged those assets to third parties as security for other things that Lehman were doing. And the third party said, well, even though we know it's customer money, you can't have it back, and the customers can't have it back. It went to court, and the U.S. courts basically agreed with I won't say the name, but it's a very well-known large bank, agreed with a large bank and said it's in the interest of the United States that you keep the money.
I'll say it. It's JP Morgan.
Yeah, sorry. Okay.
Chris, I mean, one thing you could do is talk to people at your company, maybe the law if there are lawyers there or something, and tell them about the great taking. I think that's what David Rogers Webb said. You know, we need to let people know about this because very few people, even the people at the top, are not aware that they could be really in trouble because of this. The system they've built around it. We've got another super chat from Joseph Pohl. Thank you, Joseph. Says, when buying gold and silver, do you prefer those that are marked as legal tender, or do you worry about that and diversify, or you do not worry about that and diversify with coins, rounds, and bars? I'll let you answer first, Clive.
Um, from a personal perspective, I like to own all different kinds. First of all, gold is a very expensive thing. So it's a choice between gold and silver. Uh, if you want to invest a lot of money, the way to go is gold because it's very small and it's easy to store. But if on the other hand you're investing a lot of money in silver, it's going to take up a lot of space. For example, if you buy a kilogram, well, with one gold coin like this, you could probably buy 3 kilograms of silver coins, something like that. Certainly 2.5 kilograms of gold of silver coins. So you can imagine the weight if you wanted to buy $10,000 worth of silver. It's going to be quite heavy. So that's the first point. And the second point is when you're buying coins, whether it be gold or silver, it does make sense to diversify by legal tender, to diversify by issuer, by country, by design, and by numismatic value. So, from my perspective, if I see a nice, beautiful coin from some distant island like Tokelau, which is looking very, very pretty, it's in pristine condition, so that would be typically silver coin. I'll be prepared to pay a little bit of a premium to get that coin because you don't see them often. On the other hand, if someone comes along and offers me something, I did actually buy some the other day, these silver maple leafs from Canada, they're
Hmm.
1 ounce coins. I'm not really going to be prepared to pay much of a premium at all for them. I mean, if I get them at the silver price or only fractionally above, fine. but there's no point in paying a premium. But I would pay a premium for a beautiful coin. I'll give you an example. In the UK, legal tender coins, the Queen's Beasts collection, that's a very beautiful collection of coins available in both gold and silver. And they cost rather more than the silver price, but it's worth it because they're very, very beautiful.
Yeah, well, I'll give my 2 cents on that. It depends, I guess, where you are. It looks like you're in the US because you paid in US dollars, the super chat. Um, in the UK, for example, sovereigns and Britannias, gold and silver Britannias, they're considered legal tender, and there's no capital gains tax on legal tender. So it doesn't mean to say that I don't have gold and silver coins that are not from the UK, but you want to focus on that. In the US, unfortunately, there's still capital gains tax on gold and silver, be they legal, be they U.S. coins or whatever. But I heard there's a lot of there's a movement going around in the U.S. by some states like Tennessee, Texas, and others that they want to take out like the sales tax from gold and silver, and maybe they could take out also the capital gains tax from gold and silver. But like Clive said, I like to have a mix. You just buy gold and silver coins that you like as well. Yes, and I guess if you are in the US, you might want to buy US coins because if things get really bad, people would probably rather take an American gold coin than an old French Napoleonic gold coin, for example, which I like, which is more numismatic. So
Another thing I can say, Barry, is it's much more fun to pop into the pawn shops, that's PAWN, to pop into the second-hand shops or to go to the watch shops, the ones which sell second-hand watches, those sort of places and say, have you got anything? Because you never know what's going to come out of the drawer and you never know what you're going to find. And it's quite exciting. And sometimes you see some very unusual stuff. And there's a lot of fun in that, as opposed to going to a coin dealer and saying, I want to give me 100 Krugerrands, please.
yeah. Matt Bittner says, have you bought any more PBR shares? PBR is Petrobras ADR. Petrobras is the Brazilian state oil company. It's partly state-owned and partly, quoted on the stock market. No, I haven't bought any more, but yeah, it's doing quite well. And I think it's a good investment for the dividends. But yeah, I haven't bought any more. Uh, Hizia 18, do you know if it is possible to buy art with gold nowadays? Well, it depends who's selling the art. If it's a gold bug, someone that's into gold and silver, I'm sure they would probably accept gold. It just depends on the individual that's selling the art. You could, don't you think, Clive? It depends on the counterparty.
Well, it could be art or anything. I mean, you never know who's going to accept gold. I mean, the other day when I bought a coin, it was in St. Moritz, and I went into a watch shop, which was and a second-hand watch shop, and I said, "Have you got any gold coins?" "Oh, yeah, somebody bought a watch, and I got some gold coins. You had a few of the double eagles, and I bought one of those, and I bought one for one of my friends. So, uh, it- yeah, you can. People do accept on occasions uh, gold in exchange for art or for, in that case,
Yeah.
particular case, watches.
It could have been an American that went to Switzerland, took a few of his coins because sometimes it's difficult to take too much cash out from the US. They've got a lot of rules. So that's the other thing you can do. Full of Hope, should I sell my rental, maintenance costs, and net zero regs coming in will be expensive to implement? Should I sell? She's in Northern Ireland, at Clive. So she's got a property that she's renting. I mean, I don't know how well you're doing from the property right now, if you're making a profit. But yeah, they are trying to bring a lot of these regulations. Like they want people to install heat pumps instead of gas uh, you know, gas. Yeah. So,
Property is a very individual thing, so it's quite hard to answer anybody who asks you about a specific property without a lot more information. But as you say, Mario, it depends whether it's profitable. It depends how much she's going to have to spend on it. Depends on what relationship she's got with her tenants, whether they're reliable or whether how much tax she's going to pay. And of course, we've seen in the UK, for example, they brought in a lot of taxes on these holiday properties and properties for rent, which make it, for example, in the UK now, I don't believe you can deduct your mortgage interest from your rental income,
oh yeah,
which
that's
makes it
right.
a completely different equation for those who thought they'd bought a property with the purpose of renting it out for holidays. Um, so, everything depends on the situation as to whether you should keep it or sell it.
Yeah.
But so there's no straight answer. But personally, if you've got a property and it's making profit and you've got it already, it's an expensive operation to sell it and buy something else. So my inclination is if everything's going really, really well, just hang on to it.
Yeah, and even I guess if they bring all these rules and regulations full of hope, and you don't make too much of a profit, I think it's always, and if it's not highly leveraged, if you haven't borrowed that much to buy it and let, uh, I think it's always good to have bricks and mortars. But you need to decide that yourself. And this thing with the net zero as well, we're seeing, these farmers everywhere protest. They haven't started protesting in the UK yet. Who knows? Maybe in 5, 10 years' time, this could be all finished. This could be just a fad, and we'll go back to common sense. And then you might be kicking yourself. Well, why did I sell that? So it's a tough one, though.
Well, the if you look at the stock market, the clean energy sector of the stock market is the worst performing sector of the stock market this year, apart from China.
Full of Hope actually just commented again, said it's mortgage free, good we earner. So yeah, I would keep it Full of Hope. I wouldn't sell it. Yeah. So we've got a minute or two, Clive. See if there are any more questions here. Ryan Morosi. Why, this is for you, Clive. Why is all the goods stored in Switzerland?
I mean, he means gold.
The mountains, etc. Well, I know one of the reasons is because there's no capital gains tax in Switzerland.
Yeah.
Clive?
Switzerland has been one of the largest importers and exporters of gold for as far back as the eye can see. There are many gold assayers and refineries in Switzerland, and of course we have the Swiss mountains. So inside some of the mountains, and there's many of them, but in a few of those mountains, they've built very, very deep caverns, which are used to store very important goods such as data or, in some cases, gold. And the reason they do that is these mountains are supposed to be nuclear bomb proof, so that if the brown stuff hits the fan globally, the idea is your gold will still be tucked away in a Swiss mountain instead of smoldering in the atmosphere.
Yeah, that's right. Okay. Good. I think just one more question here from Julie Smith. I have taken your advice, or it's a comment. I have taken your advice and decided against stacking physical uranium. Just wondering what is in your sweater. It's I love CO2 hoodie. Uh, yeah, if you're interested, it's from Wide Awake Clothing, and here's the link. I love CO2. I did an interview with Dr. Willie Soon a few weeks ago. He was interviewed by Tucker Carlson as well, and he worked at Harvard for over 20 years, and he's one of these scientists who hasn't been bought by the climate change people. And on my interview with him, he said, CO2 is the gas of life. So that's why I bought that. Clive, any comments on that?
Well, as far as your lady who's going to store uranium
Yeah,
or buy it, she mustn't forget that every uranium atom, every microsecond is releasing, blasting off 3 electrons,
yeah.
which, if there's another piece of uranium in the facility, will set off another 3. So then you've got 9 atoms, and then those 9 produce 3 times that. That's 27. So if you have too much uranium stacked in a box, it's going to go bang
Yeah.
in a nasty way.
Well, there's a couple of uranium stocks that I've actually made promotional videos for. Uranium Energy Corp, UEC. Look that up. And also UROY, Uranium Royalty. And I think UEC, they actually hold a lot of uranium. So if you buy that stock, you're actually buying uranium indirectly. So you could think about that. Okay, Clive, thank you for coming on the live stream, and I want to thank also the viewers for coming on the live stream for all the questions, all the super chats, and basically caring, basically being on the live stream and wanting to listen to Clive and I. And I want to wish you all a very good week.
Thank you very much, Mario. And if any of your listeners want to see what I'm thinking from time to time, and I publish several times a week, look on LinkedIn, look for Clive Thompson, and you'll find me, and I'll accept you as a friend. And then you can ask me questions or read my posts.
Yeah, and that's right. I read Clive's posts religiously. Okay, take care, everyone. Goodbye.